Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, February 17th, 2009. Well, the market's gapped lower today, guys, across the board, and this is a main result from weakness across the world in the global economies and in the global markets. Now, what did we see? Well, we saw the GNP, the gross national product, basically from Japan coming out yesterday and the day before and prior to the markets open this morning, and basically telling us that they had dropped 3.3% for the quarter. That's huge. I mean, when you talk about a drop for a quarter, year over year, that would equal out to 12 to 13 plus percent drop in gross national product. And that's huge, guys. I mean, any way you cut it, that's big. You're seeing the markets react to that. In addition, you have some weakness across the board, whether it's the stimulus disappointment. Granted, the stimulus plan passed on Friday night, but the fact of the matter is, people don't really believe right now that the markets are going to reflect the positive nature of the economic stimulus. They don't think the market actually believes that the stimulus is going to be put to the right amount of use. Only a certain amount of that proposed stimulus is actually going to come into play this year, and that's a big concern for the markets. There's no doubt about it. But you guys know we focus purely on the charts. It's always good to have an ear to the news just so you understand what's going on economically, and it gives you a sentiment indicator. And I will say one thing, folks. This weekend is Options X. You guys know how we feel about Options X. Options X is one of the whippiest weeks you'll ever see. Once a month, this week comes. We have Whipsaw Wednesday. We coined that phrase because of the volatility on Wednesday, specifically before options expiration on Friday. And it's going to be a wacky one. I assure you that, folks. As of now, you're starting the week lower. Oftentimes, you'll see Whipsaw, where you have a big up day, big down day, big up day, big down day, or just some whippy nature intraday. Today's a very interesting day. We are seeing a lower move in the markets. The Dow is down 263 points. The NASDAQ down 57. The S&P is down about 33. Really about 3 to 4% across the board. So, I mean, you're having a big decline today. But the question has to be asked, what do we see here, folks? And one thing I want to point out is you gapped lower right below this support line in the market, which became resistance as soon as you gapped lower. Now, these lines, it was actually tough to find them because it goes back so many days because of the massive gap down today, but I was able to find them all. They all coordinate either with highs or lows or key channels in the market from previous days. And when we get to the 60-minute, I'm going to look at the 60-minute, the 120, even go as far out as possibly the 720-minute to show you guys a larger view of the intraday. I'll show you exactly how we get to a lot of these levels here. But nonetheless, you can see how impressive they are. This one's a very easy one. We just put this one in because should we break above this line, then you could easily go to that level. And this is the low from going back to Thursday. Now, you can see that stretched straight across, but you have this secondary line below it, which actually the market gapped below, tried to capture. If it had recaptured, we would have looked for this one to be tagged, but instead, by the end of the candle, and these are 10-minute candles on the SPY, you close below. That tells you you're going to go lower. The next candle goes to the next support line. The next one breaks down, hits the bottom trend line, and these trend lines come back literally 2 to 3 to a full month back in the levels of this market, folks. Notice how you touch the lower trend line support line, and then you rebound intra-candle back to close on this support line. That's key, telling you the market could have a little bit of a bounce in it. In with that, you actually do get a bounce in the next candle, and then you just start to trade in this range, guys, and it's a very range-bound market for a market that gapped down as much as this market did. Usually on a gap down like this, of this magnitude, you have moves intraday of much more large swings. But what you're really seeing here is this lower trend line, and I'm going to follow it with my little cursor here, and you can see that lower trend line, and this upper trend line, you're just kind of bouncing up and down in this trend. And this is actually a pretty low-key trend line, small in range, basically 50 cents, from 79.50 on the SPY to a basically 80 on the SPY. Now, this 80's been a key level, guys, and I can't stress this. This 80 we've tested multiple times across here, and you can see these upper candles getting right about to 80. Here we were above it, but we sold back, closing back below 80. And if the SPY can clear 80, you should get a nice move up, guys. There's no doubt about it in this intraday market. Now, if the SPY can't, and notice the SPY actually tried to break lower. Notice these lower trend lines breaking below, but they never closed below this level. if you're able, and you're right now going right into the 20 moving average resistance, first hit of the 20 moving average here, but if you're able to come down and break this lower trend line, you may test some of these lower support lines. All right, there's some big levels here sloping down, and these could be tested, which means we could go lower. Now, first level on the market would be the double bottom support. So right here, see this tail? This would be your first level of support, and that's at approximately 79.20, 79.15, right in that range, 79.15 to 79.20 in the markets on the downside. If we break below this below this trend line, right now you're hammering on the upside actually of the 20 moving average. You clear that 20, you'll probably go retest this 80.0 on the SPY. So those are your intraday levels on the 10-minute. Now I'm going to expand it to the 60-minute, guys. I want to just show you some key levels here, and we're going to take a closer look at where we got some of these levels from. Now the interesting thing here is, guys, you can see how these channels, and I'm going to show you going back here. I want to actually show you where we're getting these from. This upper channel is from this point on the 28th, the high of the 28th, to this point, the first candle, and really the high on the 4th, it looks like, of February, and then right down. Alright, so that's that channel. In addition, you have the key level, and I'm going to go back in this chart because it's so important. You guys remember when originally we talked about this breakout right here, where we initially moved up to the 200, and this is going back literally 2+ to 3 weeks now on our analysis videos intraday and on our research center videos. And what you did see here is this channel, and I outlined this channel in this video in the nightly one as well, this level of resistance, and we broke above it, we retraced back down, never got a confirmation below that, rallied all the way up to the 200, and then sold down, gapped below it on the second, and rallied back to close above it, and then you continued to regain and make a move back up towards this same trend line here that we're using now on the upper side, and then so forth, so back. So this is this lower trend line. Very, very important level, guys. I can't stress how important this level is. Now, this is the exact low of the day, came right into that channel support line, and that's where I'm getting that lower line from, guys. That coincides, by the way, with this lower line right here. This is that same line, just on a closer view on the 10-minute, as opposed to now going back to the 60-minute. You can see it right there. So this is really where the market's trading. Now, in addition, you want to follow this. You could easily break up, but this upper line would be resistance, and it's going to coincide with approximately 80 if we were to break up right now. But notice how it's sloping down. Every 60-minute candle is going to obviously be a slightly lower level on that chart. So you want to follow that as well, folks, all right? I'm going to now scan out to the 120-minute chart. I want to kind of give broader and broader views of this market because it's very imperative. Now, the gap down today, guys, notice how you're on the 120, you don't really see any levels of support straight across. Now, I'd have to go back further to November, really, to start to get into levels. The Dow is actually just about 100 points away from a new low. The S&P and the NASDAQ are higher, actually. They haven't been as weak as the Dow has been. But nonetheless, you can see some of these levels, guys. And again, if you want to just draw them in, you can see here, very key level there. You can see the top of that got tagged. And I'm looking at some of these other ones to see exactly where they come to, but I'll have to go expand even more. But nonetheless, this line is the one we drew in on the 60-minute. You guys can see this one going back here from the highs, and going back here, that's from that high as well. So you can see how all these time frames, these levels can be seen, and very, very important. Okay? And I want to just scan out one more time to the 360-minute, guys. The 360-minute gives us a better view. You can see here in early January lows how we broke below it today on the gap down. Now, that's a little worrisome because when you gap down and you can't regain that, if we were to regain that today, I'd be actually bullish. But as long as you gap down below these lows, you have to be a little cautious, guys. There's no doubt about it in this market. Be a little cautious as long as you're below those early January lows. Now, you can go back even further, folks, and you can see how we were, even not even going back to December. You have to go back to November to actually see any lower lows put in than where we currently are. So it's going to be very, very interesting, guys. There's no doubt about it. Here you can see a little bit of a channel, and I want to just draw that in there from that point connecting through. There's a lot of other levels here as well, but I don't really have the time to go into much of them now. But again, just a reminder, folks, we talk about our daily charts and going into the daily levels and where the market will go and where it will find support. And there are some couple key support lines coming up here, and we have to watch them very carefully on the daily. But again, that's reserved for the premium subscribers of our research center, and we really can't go into that stuff as well. All right, folks, but nonetheless, keep in mind, this area on the markets right now is pivotal. We close above a certain level, and we'll go into that research center tonight, in the premium video, it's going to be good for the market. We close below a certain level we're right near right now. It's going to be very bearish, and we could retest the November lows. Insane amount of stuff going on right now in this market. Stay tuned. Join the Research Center. We hope to see you there. Take care.